Dale, welcome to Face.
Welcome, Dale.
Good morning, guys. How are you?
Great. Excited to meet you and talk to you. Seen you on X, on Twitter for many years, and looking forward to talking to you. Why don't we start with your journey?
Well, that's very kind of you, Dale. So it's always nice to be talking to another Dale. Um,
Yeah,
I actually put a short prezzo together for you guys because I wasn't sure what you wanted to cover. So
okay,
let me see if I can
sure. It's
grab
at the
this.
bottom, the screen share,
Yep.
that little green box.
Can you see that?
Yes, here it is. Your presentation, PowerPoint up there.
It is.
Yep.
Okay, so this is the first interview I've actually given. I'm quite a private person. I've been around the industry a very long time, and I know a lot of people. I've worked for some very big firms. I've managed a lot of money. I'm semi-retired these days, so I sort of keep myself to myself. I do advise a number of the great and the good in the industry still. And the Twitter page is just a little bit of fun. And if you've read some of my posts on there, you'll obviously appreciate that. So a little bit about me. I've got a master's degree in engineering from Imperial in London, which is the UK equivalent of MIT. I've been in the business now for 37 years. Worked for various bucket shops, as you can see there. And I've
Bucket
been
shop.
a prop trader, hedge fund manager. I've allocated capital to hedge funds, private equity funds. I've been a CEO, CIO, COO of various investment firms and funds. And
How
so
about it? Haven't you been a COOK?
yeah, I do that every day. I'm
A
the chief
kook?
chief
Okay.
chief cook. Yeah,
All
exactly.
right. All right.
And I've traded pretty much everything, whether it's relative value, whether it's directional. I started out life as a global macro trader, then I moved into quant equity. And these days I do a little bit of everything, but I would guess primarily focused for the clients that I have working on the long short side. So that's a little bit about me. And how I do things is what I call a techniquantamental process. And I think it's very important that you actually have a process when you're investing or trading. And this incorporates a little bit of everything. So, my background is as a macro guy, so I have a big picture view on, all the, major drivers of economies, growth, inflation, interest rates, and so on. And then I use various proprietary quantitative screens. I come from a quant background, obviously. And then apply that to specific stocks or securities and use some qualitative analysis, and that's where the gray hair comes in. And then what I do, which I guess you guys are probably more interested in, is I do incorporate quite a lot of technical analysis in what I do in terms of timing. And for that, I look at, various chart patterns, trends. I do believe that you can chart pretty much anything. And if you can chart it, you can form an opinion about it.
Let me ask you this, Dale.
Yeah,
Do you watch the Face Show?
I do. I've watched
Why?
I've
Go
watched
ahead.
your show for a number of years now, and I think you guys deserve a lot of kudos for what you do for the trading community. It's a little bit short term for what I do, but I like the personalities on the show, and I do like, hearing the information flow and seeing you share things.
Okay,
Thank you,
so
Dale.
that,
Sorry, I just
yeah,
need to say thank you.
yeah. So, that's interesting because your background is so in depth and you've accomplished what a lot of people, hope to one day. So
Yeah,
I
well,
would
life throws various curveballs at you, Dale. I became, personal bit about me. I became a single parent a number of years ago, and had to take a step back from working for the great and the good so I could focus on my three children.
yeah,
But
wow.
but
Yeah.
yeah, I still love playing the game, and I can't imagine, although I'm sort of semi-retired, I can't imagine doing anything else at the moment.
Well, it's like Hotel California, Dale. You can check out, but you can never leave. So I was just curious why a trader with your acumen would watch Face. What do you get out of it?
It's because I like hearing the views on various commodities and various currency pairs, and obviously interest rates. That's one of the main drivers for what I do.
Okay.
I still run global macro positions. I've got two main focuses. One is global macro, which is a book I run, which is very long-term focused. It doesn't turn over very much. So what you do is too short term for what I do, but I do like to hear your views because it's key to me in terms of timing, in terms of hedging or taking positions off.
Okay.
So
Good to know.
thank you.
So FACE is a place where pros come
Yes,
too.
it is.
Okay.
Indeed. And I am a big believer in the fact that you learn something every day. It doesn't matter how
Yeah.
old you are, so
No, it doesn't.
keep learning. Anyway, I can't show you too much about some of the positions I have on, but obviously this is a portfolio that I have with Citadel.
Okay.
This is one with Walleye, which is another big hedge fund in the States. And this is BlackRock, and obviously everybody knows BlackRock. So
Yes.
I'm consistently ranked #1 in the world or top 1% in the world for what I do. Having said that, I guess most people that know me via Twitter would know me for some of the major market calls that I've made over the last number of years, specifically after 2020. So this is something that I posted March 16th, 2020. It was regarding the DAX, and it was in terms of, we're nearing critical support. And obviously that was a few days before the market bottomed. What I'd like you to note about this chart is the period from 2018 to 2020, when you can see it made a peak, and then it made a trough, and then it made another peak, but it was very choppy price action. And I'll come on to that later because it's an interesting analogy.
Because it's happening now.
Yes, it's happening now.
Just call me Kreskin.
Yes, indeed.
I'm a mind reader.
Indeed.
All right.
This was another call that I made March 2020, March the 18th. Actually, this was on copper. And I was looking for a bottom and a reversal signal, and it actually happened the following day, March 19th. And since then, copper's traded from 2 up to wherever it is now, 4.5.
Okay.
And then probably the biggest one that people remember me for is calling the bottom in the bond yields in March of 2020. And what I said then, what I stick to now, is that we've reached, or we had reached, a generational low in yields in March 2020, and inflation as well. And I think that will continue to be the case for the next probably 10 to 20 years, at least probably while I'm still in the business, is my guess.
Okay.
And so one point I would like to make is timeframes. Macro trends tend to last a very long time. So when I say a generational low in yields, I really mean that. I mean, this is something which will go on for many, many, many years to come. And you will see me posting often on Twitter. We are in the early innings still of a generational move up in inflation and yields. And, I'm old enough to remember, the 1970s. Yeah. And I do believe, people are skeptical, but I do believe that we are on a path back to that. It may take us another 10 years to get to it, but we could easily see high single digit or even double digit inflation and yields between.
So you don't think Powell's another Volcker?
No, not at all. In fact, Dale, don't get me started on central bankers and politicians, because it's my bailiwick is that central bankers are a bunch of criminals, and they've got us into a right old mess, and this will play out over many, many years. Anyway.
Okay. Well, I hope to have a beer with you at the lynchings.
Yes. Well, I should be at the front of the
queue. All right, buddy.
Anyway, this is a couple of ideas from Q4 last year. This is one I think Stelios liked because it was about silver. Because of my view on inflation and the fact that we're in the early innings still of the inflationary cycle, I think any commodity, well, most commodities, but certainly precious metals, I think over a period of time will outperform. So I do believe that we're in the early stages of seeing gold and silver take off. Will probably play out over the rest of the year, maybe into 2025.
Do you follow the miners, since you're talking about silver?
I do follow mine.
Okay. All right. So
We can
you
come on
look
to
at
that.
things,
We can
you
come on
look
to that
at
in a second.
you look at things like First Majestic, AG.
I look at it. I look at all of those.
Okay,
I
so
I cover about 5,000 stocks in my quant analysis. So yeah, I cover
here's
all
my
of them.
question, and no
Yeah.
one's been able to answer it. Maybe you can, Dale.
Yep.
So, in all those March lows that you've identified in different instruments,
Yes.
silver also bottomed at about $11, $12, right? AG was 420 at that time, 417. And it had a nice run, just like everything else after during the last phase of heavy easing, etc. Can you tell me why AG is trading back at its COVID lows with silver over $10 higher than it was when AG was 420 the last time?
I can't answer that question, Dale. I do cover all the miners, AG being one of them. I have noted recently that it's back to its 2020 lows, and in fact, it's
Yeah,
probably at a similar level now to what it was, maybe
it
10
is.
years ago, sort of 2015. In my view, it's an anomaly. It could be very stock specific. I don't know enough because I
Well,
cover.
they're all doing it. A
Yes,
lot of them are doing it.
many are doing it. There are some miners that I like, and we can come on to that maybe a little bit later.
Okay.
Um, Here was another idea anyway from Q3 of last year, which was Tesla, which is another one of my bailiwicks. I think Tesla is such an overhyped, overvalued company. To think that there's going to be one EV stock going forward and Tesla's going to be it, I think is bananas. Given the fact that all the other producers are in the space now, I think it's just a question of time before, Tesla suffers a fate, which is going to take its stock price down. It's Elon Musk for me is yeah. Well, let me not get onto that.
Okay.
Okay, so here's some of my current thinking. This is something that I put out last week, I think. I think over the next year or so, oil and gas producers are going to significantly outperform technology. And when I tell people that, I get strange looks because obviously
That's a good sign.
everybody's in. Yes, it sometimes pays to be contrarian. There is a lot of hype about technology, and in many cases that's justifiable. But I think that looking in isolation at stocks like Apple and Microsoft and Nvidia and so on is the wrong way to look at the space and the sector as a whole. And for me, if I think about the economy and the drivers of the economy and inflation and where I think things are going to be in a year or two's time, I want to be in something which is related to an inflationary product and not in something which is going to have a headwind of higher for longer rates, which I do believe is going to be the case. So I have this idea that if you're a long-term investor, or even if you're a long short guy like myself, and you switch or rotate from tech into oil and gas, I think it's going to pay off very handsomely over the next year or two. And let me explain some of the logic behind that. Firstly, if you look at XLE as a sector against S&P over the last couple of years, what you'll notice is, and I think this has gone unnoticed by many people, is that oil and gas has actually significantly outperformed the S&P, much more so than technology. And I think that would be a surprise to many people. When I look at charts, and I do look at technical analysis, although I've got an IQ of 148, I'm a very simple guy at heart, and I actually like to look at very simple patterns. So for me, I like looking at Fibonacci retracements. I like looking at Elliott wave. I like looking at channels and breakouts. And so for me, this is a classic sign of a breakout pattern higher, and then a consolidation in the channel. And the fundamentals to me suggest that rotating into oil and gas relative to SPY is the right trade. And if I look underneath the cover, if I look at some specific stocks, Exxon, for instance, exactly the same pattern that you can see. It's a breakout channel, and it's had a nice pullback. I like 50 to 60% retracements. and it's probably going to head higher again. And the
So
fundamentals,
mainly the producers.
yeah, exactly. So look at Oxy, which is another one, exactly the same pattern. Look at SM Energy, again, exactly the same pattern. Look at Avinity, exactly the same pattern. So for me, when I see similar patterns in stocks in a sector, for me, it just reaffirms my conviction in an idea. And so let me come back to the other side of the equation, which is, what would I want to be shorting against, or what would I like to be rotating out of? And it's technology. Now, if you look at XLK relative to the SPY over the last few years since COVID, yes, its technology's outperformed SPY, but surprisingly, not by very much. Certainly not by as much as the oil and gas sector has. So again, to many people, that might be a surprise. And obviously, you guys are in the business, you're in the trade, so you know that Microsoft and Apple are the two biggest components of XLK. So
I've been bearish Apple since last summer. It hasn't made a new high. Under 180 looks like 160 to me.
Yeah.
How
Exactly.
about you?
Yeah, exactly. And to me, this chart looks to me like it's running out of gas. So I'm thinking that we will get at least some kind of 10% correction to the downside for XLK, which probably means Microsoft and Apple. But don't look at just Microsoft and Apple as technology, right? So
Right.
when I see the sector idea, I dig underneath the bonnet again. So I see stocks like Adobe. Now, to me, Adobe looks like a pile of craps, excuse my French,
Yeah.
but this looks like there's a significant.
It's crapé in
Yes,
French.
or crep. Yes, exactly. So there is, for me, there's significantly more downside in a stock like Adobe relative to SPY.
Okay.
Or if I look at, Cisco. So the reason why I put this chart up here is I posted on Twitter the other day something about, I think we're in some sort of blow off top for semiconductors and AI and chip stocks. And people actually think I'm joking when I say, if you get in now, you could easily lose 40 to 50% of your money over the next year or two. You could.
Yeah.
And there's obviously the FOMO factor involved. And I understand that from retail. My advice is don't do it. Wait for a pullback. And it's easy to say that when I don't have any skin in that particular game. In fact, I'm actually short names in that sector. But you and I have both been around long enough. The .com bubble, right? Here's a stock, Cisco.
Is AI the new .com?
I do believe there's certainly elements of that. I'm not going to come out and say it's exactly the same. Never is.
Yeah.
But yes, there's elements of that. When you look at what some of the names in the space are doing, and it's quite a concentrated sector, obviously, as well.
Yeah.
So here's Cisco. Cisco was a .com darling, but here we are, 20 odd years later, and it's about to make new highs. In fact, it's breaking down. So I think, Cisco relative to SPY could, fall easily another 20 to 30%. And here's VeriSign, another example. Sorry, I did this prezzo late last night, and I wasn't thinking clearly when I was putting the lines on the charts. The red uptrend line is the one that it's breaking, is the uptrend from 2002. The arrow points to the next shelf of support, which is it's a relative chart, but it's about another 20% downside from here. So what I'm saying is within the tech space, there are names, not Apple and Microsoft, where there is potentially significant downside. So hence the shorts, some of the tech names, long some of the oil and gas names, for me, is the sensible long-term trade to be putting on right now. Or one.
Do you have any comment on the Widowmaker losing 50% of its value? Are you seeing anything there in the natural gas producers?
I try to avoid nat gas, certainly as a commodity. I have traded it historically. I ran a commodities hedge fund back in the 07, 08 era, and massive boom and bust in prices. It's something that I typically wouldn't trade. It's too volatile for me.
Okay. All right.
But I do think, like other commodities, it will
have its day.
It will have its day, just because inflation will become embedded in the system. I do believe that. So I'm not going to tell you how to trade it short term. I would never do that. But as a commodity, I do believe that it will have its day for sure.
Okay.
Okay, so here's some. I'll try and be brief and sort of come up with some final points. Do, I'm not going to spend too much time on the slide because I will get involved. This is like any other chart that you've seen, like, SMCI, like GameStop, except this is US total public debt. No chart which looks like this, whether it's a meme stock or whether it's a bond price pre-COVID, or whether it's this chart of total public debt, never ends well. Never ends well. It's a rocket ship which will eventually run out of fuel, and it's going to fall to earth.
Will that be but you're looking for inflation. Wouldn't that be deflationary?
I'm not smart enough to know how this all ends, Dale.
That's why I asked you.
I'm not. No, I'm not smart enough to know.
Okay.
What I do know is that it doesn't end well.
Okay. All
and
right.
here's another chart that I like. And people say you can't chart economic statistics. Well, I beg to differ. This is a chart of US core CPI going back 60 years. Now,
Wow.
To me, that's a beautiful trend line break. It also suggests to me that inflation has a dividing line at about 2.5%. And when it's above 2.5%, it stays above 2.5% for a very long time and can go very high. And
so
then
this was only the first wave up in inflation,
yes,
like the 70s.
Absolutely.
We had three in the 70s, right?
Absolutely. Okay. It's like a beach ball. For the last 20 or 30, 25, 30 years, the central bankers have been trying to hold the beach ball down under the red line, which is, the water line, if you like. And now they've not been able to hold it below there, and it's popped up. And I do believe the cat is out of the bag now. So for me, I believe this is a perfectly nice retracement in inflation, but you're not going to get rid of it now. It's here to stay. It's embedded. And no matter what the central bankers do, I understand what they did via COVID. They took a big can of paint and they threw it against the wall, hoping some of it would stick. Some of it did stick, but unfortunately, most of the paint went on the carpet, and they've ruined the carpet. And the problem with that, Dale, is it's ruined the carpet, but in the meantime, everybody else has been walking in around the room, getting paint on their feet and walking around the rest of the house, and now the rest of the house is ruined as well. So this doesn't end well.
Yeah. Okay.
So this is I'm sort of coming towards the end now. This is the S&P.
Yeah.
And if you noticed what I said about the DAX charts earlier on about 2018 and 2019, you had a peak, you had a sell-off, but it was ungainly. You had a rise, which has been equally ungainly and ugly. You had an overthrow in the DAX in early 2020, January, February 2020. I remember it very well because I was trying to short it at the time.
We always remember that.
Yeah, it went past its prior peak. Everybody started to get bullish, and then it collapsed. Now, I'm not saying we're going to have another COVID, far from it. And I still think you may have more upside in the S&P, potentially to, 5150, 5250, you may. But anytime now, I'm expecting us to get a fairly decent sized correction, and it may last many, many months. So that's where I stand in terms of my macro thought on the S&P. Here's another random macro thought I have, which is there are some soft commodities out there that I think have a little bit more downside, but pretty soon you're going to be nearing some longer term support.
The grains are one of the only commodity sectors, except for the invasion, that have not participated in commodity inflation.
Yeah, exactly.
Yeah.
And here's another hot topic, which is uranium.
Oh, yeah.
I do believe long-term uranium goes significantly higher. I think shorter term, and for me, shorter term, you have to remember about time frames. My shorter term is not your shorter term. I do believe that we're due for a pullback, and never short something that's got an RSI of more than 75. People get confused and they see a high RSI and they think, oh yeah, I'm going to fade that. You never fade a high RSI. You fade the trade once the RSI comes back down again. And in fact, my favorite trades are actually shorting things where the RSI is below 50. But in this case, I do believe that uranium is probably due a little bit of a
My
pullback.
number's 70. Looking
Okay.
for divergences, so we could have like a
Yeah.
78 reading and then pull back, and then next time it doesn't get over 70 and it pulls back, and one more time it doesn't get over 70.
Yeah,
Those are my
no,
favorite setups.
yeah, I fully understand that strategy, and I think
Yeah.
that's a sensible way to look at it. Right. So here's a cautionary tale. So the caution in this tale is that you need to understand what it is that you're trading. Okay. If I didn't label this chart and I didn't know what it was, and I'm looking objectively at the chart, for me, this is a buy. Okay.
Yeah.
Because you had a period, you had 4 or 5 bumps against resistance,
Yeah.
broke through, came back, retested, moved higher, it's pulled back, had another retest. All the moving averages are moving in the right direction, in the right order. And you'd say it's a buy. The thing about this chart, and the point that I'm trying to make, Dale, is you need to understand what's behind the trade. And being long euro half is not necessarily a no-brainer because of the carry. And because
What is Huff?
that's the Hungarian forint.
Okay. All right.
So you'd say I would, because I don't have a very strong dollar view right now. My macro view on the dollar is I think we're just sideways for the next period of time until we get another big driver that tells us which way to go. So if I'm looking at currency trades, which I often do, I'm struggling right now to find any clear opportunities. In equities, I can see them. In rates, I can see them, but I can't see them in currencies right now. But if I was going to do a trade, I'd be looking at something, Euro crosses, or I'd be looking at Aussie crosses. I'd be looking at some of the crosses more than the outright dollar pairs. And this would spring up and I'd go, oh, that looks like a nice trade, except, half rates are over 10%, right? So you don't want that carry working against you.
Yeah. Expensive.
So I'll just finish off. Here's a couple of some of my core equity long shorts at the moment. This is in the tech sector. This is a company called MoneyLion against Microvision. So you take the track records that I showed you before of the portfolios that I run, the long short portfolios. They're all beta hedged, so they're beta neutral. They're dollar neutral. So this is a dollar neutral trade. Long MoneyLion, short Microvision. It's a beautiful chart. I love patterns on charts. So I do a lot of quant work, but I love pictures. I'm a very visual guy. I think most men are, without going too much into detail on that. And then if I show you just one more trade, this is Telos against Sensata. Again, it's a picture perfect trade set up for me and what I do on the long short side. So let me just finish off, Dale. I'm not selling anything. I don't have a website. I don't have a service that I sell. This is not investment advice. I've been in the industry a very long time. I enjoy what I do. You don't survive in this industry without depth. And by that, I mean diversification. So my portfolios typically will have anywhere from 10 to 20 positions in them. Diversification saves you from many sins. It saves you getting too concentrated. It saves you getting overconfident in a position. Einstein, people think about his general theory of relativity or his special theory of relativity. He's also known for another theorem, if you like, which is that time is illusory. Time is an illusion. And so my point here is that time frames matter. When you're trading or you're investing, you have to be fully aware of the time frame that you expect something to happen in, because A, you're tying up capital, and B, it will frustrate you, and you could have something work against you where in the short term, whereas in the long run, it pays off. So time frames are important. Probability, I'm very fortunate in the fact that I'm rated very highly for what I do. But my probability of being right is historically somewhere between 60 and 70%. And I know that because I've literally done tens of thousands, if not hundreds of thousands of trades during my career. I know the probability of me being right on any particular trade is 60 to 70%. So as long as you understand that, that works in your favor. Nobody is right 100% of the time. Thoroughness, I was gonna put process here, but I already got a P. So thoroughness, for thoroughness, read process. You have to have a process in place. When you're trading or investing, you need a process. I know what mine is. You need to understand what yours is and be thorough about it and be rigorous and be disciplined and stick to it. And then the final thing is humility. Because I know that I'm only right 70% of the time, I understand that the 30% of the time I'm wrong. That's okay. It's okay to be wrong. Don't beat yourself up if you get something wrong. Just
It's
kick it
also
in.
okay to not know and admit it.
Yeah. Just kick it into touch. Kick it into touch. And that's where everything else, the diversification, the timing, the time frames, the probability, the process, having the humility to understand all of those things work together. So if you're diversified and you know you're going to be right 70% of the time, it's okay to be wrong and kick those 3 out of 10 trades into touch. Get rid of them. Move on. Go through the process again. Come up with another idea and keep going.
Dale, outstanding presentation today. And you know what happens after you have an interview with me?
I do.
You do what?
I become your trading warrior, brother.
You are, man. And
Thank
you can't get out of it either, like the markets. You can't get out of it. So really, I learned uh, some great technical stuff. Really was a pleasure having you here, and want to thank you for your giving nature to come on, ask to come on, and edify the community the way you just did.
Well, Dale,
Really,
that's very kind of you. It's actually too kind of you. The reason why I did, and as I've said to you, I don't do interviews. I am media shy. I don't do this. I don't seek publicity. I don't publicize myself. I'm not looking for 100,000 Twitter followers. I listen to your show often, so I have it on in the background when I'm trading or looking at investment ideas during the middle of the day here in the UK.
yeah.
And I really enjoy listening to you and the banter that you have. And literally, it was the fact that I think it was a week or two ago, you had a guest that had to cancel on you last minute. And I thought, you know what? These guys give such a lot to the community. Yeah, I need to step up and step in if they ever need somebody to present. So that was the reason for me saying, I'd be happy to come on.
A giving spirit, and really appreciate being appreciated, Dale. And one really thank you very much for hanging out with us today and really giving some great macro ideas for people to find their own way to execute on. So again, Dale, follow Dale. He doesn't want a lot of followers, but you could follow him at Flash 430. Why 430?
Well, there's a number of reasons for that name, Dale. So when I was a kid, because of my
Superhero?
well, I wish. Because of my name, my name came from Dale Arden, Flash Gordon back in the day.
Okay.
And
Yeah.
then so my nickname was Flash when I was a kid, and then
Okay. Yeah.
obviously 4:30 is the cutoff time for equity trading here in the UK. And then I also many moons ago when I was young and a young and reckless prop trader, I used to drive Ferraris and had a Ferrari.
Uh,
I had a Ferrari 430, so the Flash 430 nickname kind of stuck. So that was it.
great nickname. Great nickname. And we learned, and you put it all together. Hope one day I have more cancellations and I can reach out to you.
You should feel free to reach out for me. I love what you guys do, and I sometimes interact with Stelios via Twitter, and
Oh, yeah.
happy to come on again.
All right, everyone. Dale
I
Briscoe.
I just happily followed you, Dale. So nice to meet you and glad to have you here.
Blake, it's a pleasure.
Yeah.
Thank you.
And I got teased. It was Dale Evans in my time, which was Roy Rogers'
There
wife.
you go. There you go.
Okay. So everyone needs to say Dale. That's a girl's name,
Yeah,
right? Anyway.
yeah, exactly. So I got into many
All right.
playground fights over
So
that.
yeah, so that was my paradigm, and I had to prove what a man I was ever
Yeah,
since then. So
me
okay.
too.
All right, Dale Briscoe, everyone. Thank you.
Thanks, guys.
If people loved it. And you could join the team in, God, looks like 18 minutes on the morning edge. Good hunting, everyone. I'll see you tomorrow. It's good to be back in the saddle. Adios. Remember, don't just count your pips, count your blessings. See you, everyone. Bye-bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.